Bitcoin is trading at $69,782 as I'm recording this. And right now, two separate forces are pulling at this market simultaneously, one from the geopolitical world and one from the corporate world. The first is a leaked ceasefire proposal between the United States and Iran that analysts say could be the most significant macro catalyst for risk assets in months. The second is Michael Saylor posting two words on social media this morning that the Bitcoin community knows from experience means one thing: a purchase is coming. I want to walk through both stories today, and then I want to show you what the derivatives data and the positioning charts are saying about how leveraged traders are set up ahead of what could be a very significant week. I'll describe everything in plain language so it's fully clear whether you're watching along with the charts or just listening. This is not financial advice. Let's get into it. Story 1. The 45-day ceasefire proposal. The story that is driving Bitcoin's price action today broke this morning when leaks emerged from diplomatic back channels suggesting a framework for a 45-day ceasefire between the United States and Iran is being actively negotiated. This is not a confirmed agreement. It is a proposal, but the structure of what is being floated is specific enough that markets have treated it as credible, and the reaction across risk assets has been immediate and meaningful. Bitcoin has gained more than 2.8% today, climbing to $69,589 at the time of the report, with the broader crypto market following in step. Ethereum added 3.08%, Solana gained 2.49%, Ripple rose 2.77%. This is not a random day of green. It is a coordinated risk-on response to a single geopolitical development. And to understand why a ceasefire proposal would move Bitcoin this much, you need to understand what the past 6 weeks have looked like for this market. The war between the United States, Israel, and Iran began in late February and has been the dominant force suppressing Bitcoin ever since. The mechanism is straightforward. Iran sits astride the Strait of Hormuz, the narrow waterway through which approximately 20% of the world's daily oil supply flows. As long as that conflict has remained active and that strait has remained threatened, crude oil has stayed elevated. Elevated oil means elevated inflation. Elevated inflation means the Federal Reserve cannot cut interest rates. And a Fed that cannot cut rates means a hostile environment for risk assets, including Bitcoin. That chain of causation, war, oil, inflation, Fed, Bitcoin, has been running in the wrong direction for 6 weeks straight. A 45-day ceasefire, if it holds, breaks that chain. If the strait reopens, oil prices fall. If oil prices fall, inflation expectations ease. If inflation expectations ease, rate cut odds come back to life. And if rate cut odds return, the capital that has been parked defensively in treasury bonds and dollar starts looking for somewhere to go. That is the math behind why Bitcoin responded to ceasefire news the way it did. But there are real reasons for caution. The leaks describe a proposal that is extendable by mutual agreement. Language that implies both sides need to reach that first 45-day mark in good faith before anything longer term is on the table. Analysts quoted alongside today's reporting noted that while the prospect of reopening the strait and de-escalating military tensions has given meaningful support to high-risk assets, the fact that Asian and European markets were closed today for public holidays means the market reaction has happened with thin liquidity. That can amplify moves in both directions. When full liquidity returns tomorrow, the reaction may either compound or partially reverse. Watch the news flow through tonight and into tomorrow morning very carefully. There is also a significant macroeconomic headwind working against Bitcoin at the same time. Friday's U.S. jobs report showed 178,000 jobs added in March, the strongest reading since the end of 2014, with unemployment falling to 4.3%. That data was strong enough that traders have now essentially ruled out any Federal Reserve rate cut this year. 10-year Treasury yields are rising. The U.S. dollar is strengthening. The ceasefire story is pulling one way. The dollar and rates are pulling the other. Bitcoin is caught in the middle of both forces on the same day, which is exactly the kind of tension that creates volatility and opportunity simultaneously. Story 2. Saylor says back to work. The second story today is shorter, but for anyone tracking institutional Bitcoin accumulation, it carries real weight. Michael Saylor, the founder of Strategy, the company that holds more Bitcoin than any other publicly traded firm on the planet, posted two words on X this morning alongside a screenshot of the company's internal strategy tracker dashboard. Back to work. For those who follow this space closely, that phrase has a specific and consistent meaning. Saylor routinely posts that same image and caption immediately before Strategy announces a new Bitcoin purchase. His way of signaling a buy is imminent without making a formal SEC filing in advance. The pattern has repeated enough times that the crypto community now treats it as a reliable leading indicator. Here is why this matters. Strategy did not buy Bitcoin last week, breaking its weekly purchasing streak for the first time this year. The firm's most recent purchase was on March 23rd, approximately $77 million worth of Bitcoin at an average price of $74,326 per coin. 1 week of silence drew real questions about whether the buying program was pausing. Back to Work this morning answers that directly. Based on data from STRC, which tracks the proceeds raised through Strategy Stretch Preferred Share Issuance Program, analysts estimate the firm may be positioned to buy at least 1,821 Bitcoin based on funds raised in the week ending April 3rd. At current prices around $69,700, that would represent a purchase of approximately $127 million. And it would come at prices meaningfully below the firm's average cost basis of $75,694 per coin. Strategy currently holds 762,099 Bitcoin in total, a position that is currently underwater on paper. They are still buying into that unrealized loss. That is not the behavior of an entity that has second thoughts about Bitcoin's long-term direction, what the derivatives data is saying. Now let me walk you through what the charts are showing, and I'll explain each one fully so the data lands whether or not you can see the screens. The first thing to understand is the liquidation heat map. Imagine a map of the Bitcoin futures market where price levels are color-coded by how much leveraged money would be forcibly closed if price reached them. Bright yellow and green represent the heaviest concentrations. Red areas are where long positions, bets that price will go up, get wiped out. What the 24-hour Binance heat map shows right now is a heavy wall of long liquidation clusters sitting below current price, concentrated between roughly $64,000 and $66,000 on the side profile. That means a significant number of leveraged longs will be forcibly closed if price dropped to that zone. Above current price, the picture is thinner. Short liquidation clusters exist above $70,000 into the $72,000 range, but at much lower density than the long liquidation wall below. In plain terms, there is more pain potential to the downside than to the upside. A drop towards $65,000 to $66,000 would trigger a cascade of forced selling. A move above $70,500 would trigger some short covering, but not at the same scale. The second critical piece of data comes from the liquidity terminal's smart money versus retail positioning chart. Here is how to read it simply. There are two separate indicators showing whether large, sophisticated traders and retail traders are net long or net short Bitcoin at this moment. Green bars on the histogram mean that group is net long, expecting price to go up. Red bars mean they are net short, expecting price to go down or protecting against a drop. Right now, smart money net open position is reading approximately positive 2,000, and the histogram has been almost entirely green bars since early April 1st through today. Smart money has been accumulating a net long position for nearly a week. Meanwhile, retail net open position is reading approximately negative 1,300, and the retail histogram has been almost entirely red for the past 10 days, with the bars becoming increasingly deep red toward the right side of the chart. Retail has been aggressively net short, and that positioning has only grown more extreme as price has crept higher over the past few days. This is a historically powerful setup, when smart money is systematically building a net long position while retail remains heavily net short. What you have are the conditions for a short squeeze. Retail traders who have bet against Bitcoin being above $70,000 will be forced to close those short positions, which requires buying Bitcoin if price continues to push higher. That forced buying then amplifies the move. The CoinGlass max pain data reinforces this picture. Bitcoin's short max pain level currently sits at $70,504, meaning that is the price at which the maximum number of short positions will be pushed into losses. Price is currently at $69,782, less than $800 below that level. What it all means. Here is the simplest read on today. Ceasefire news is pulling Bitcoin towards $70,000. Saylor is about to buy again below his average cost basis. Smart money has been building a net long position for a week. Retail has been building an increasingly heavy net short position for 10 days. And the max pain level for short sits at $70,504, just $800 above where Bitcoin is trading right now. All of those forces point the same direction in the near term. The honest caveat, the ceasefire is a proposal, not a deal, and the macro headwinds from strong jobs data and a hawkish Fed remain real. But the balance of evidence today leans clearly in one direction. Drop a comment. Do you think Bitcoin closes above $70,000 this week? And are you watching the ceasefire negotiations or Saylor's purchase announcement more closely? I want to know what has your attention right now. Subscribe and I'll keep tracking both stories as they develop. See you in the next one.